Alright, I just want to do a quick video. I posted a video 10 days ago and I mentioned how the market was oversold. I showed a lot of the profitless tech companies that were way oversold. And I said that I wouldn't be surprised if we seen a rally. So, as you can see, I got the NASDAQ up, which is more tech heavy. Um, the long-term trend line has been broken. And what I want to show is on Monday, after I did that video on Friday, we had this huge reversal day. Look at the volume that came in on that day. So the day opened, it went, I think it was down like 3-4% that day. The NASDAQ was down. People started to panic and people just started dumping the stocks. They just wanted to get out. The market's going to keep crashing. Let me get out of this. And people were dumping. That's why we had this high volume day. Even if you scroll back to the pandemic, you can see that Monday volume day was a record. It even broke the previous pandemic days. That was the highest volume day we've had even since the pandemic. Even if you go back, you got to go back to 2011 when we had a volume day like that. So when you get a volume day like that, and you're going to look at the context of what happened that day, so we were starting to sell off. The market's just been used to going up and up and up and up. Every dip has been a buying opportunity, and all of a sudden you get this dip that's a little bit bigger than the last dips. You're breaking the 200-day moving average. There's a lot of conflict in the market, and all of a sudden you get this break and we get this reversal. Like everybody flushes out. They finally give up. They throw in the towel, and that's when the market will usually do what you're not expecting it to do, which is rally. So we get this reversal. Like I had mentioned before, I wouldn't be surprised if we get a rally, and we have gotten that rally. We're up about 10% on the Nasdaq since that intraday low. But that Monday, 2 weeks ago, that marked a short-term bottom. But what I want you to look at is the volume pattern right now. And what I'm about to show with this volume pattern, this is all short-term analysis. So don't put too much weight into it. Like you're not gonna put all your money into a certain stock because of this volume analysis. It's just kind of clues of what's going on, but you want to still go with the bigger picture, the bigger trend, which I believe the trend is changing and we are now entering a bear market. But short term, with that volume day, you can tell that we had a reversal day. The low of Monday of 334.15, we'll just call it 334. 334 right now is the short-term bottom. That's going to be support for the NASDAQ going forward. But what I want you to notice is since that Monday, we've had these high volatility days with the market swinging intraday 3-4% a day. On the 28th, the market went up 3%. Then you have another 3% day. These are big moves. So if you look at like some of Cathie Wood stocks, some of these stocks are swinging. Like Shopify is swinging like 10%. It might go down 10% one day, and the next day it's up 10%. I mean, just incredible volatility going on in the market. And you usually see this high volatility on times of uncertainty. So you usually see that at market bottoms or at market tops. And I believe we're at a top. So we've rallied since that Monday. And what you notice here is just look at these last 4 days. We've had the market rallied, and then it went up another 3% on lower volume. Yesterday, it went up again another 0.8% on lower volume. Today, we had sort of a reversal, a gapped higher. It went lower, and it ended up closing higher for the day, but it ended up down from where it opened. So to me, it's like the stock is just kind of floating there. I'm not seeing any fuel behind this move. There's no um, volume behind it. So it could just be people that are being stopped out of their shorts. Like myself, for example, I had a short. I'm short a few stocks, and I had stop orders because I was preparing for bear market rally. And sometimes these bear market rallies can rally. You can get this a rally of 10, 20% in like a matter of a week or two, depending how strong people come in. And people might try to create a short squeeze. And if people who are short, like I am right now, or I was in some stocks, I may have to buy out. I may lose all my gains. If I had 10, 20% gains, I don't want to lose those gains. So I did have some stop orders in. Um, so I don't want to drag out the video I don't want to make this video too long, but we had the reversal day. Like I said, I was expecting a bounce. I said I wouldn't be surprised at the market rally. We've gotten a rally. It's hovering around the 200-day moving average. It's been on lower volumes. I'm not convinced with this move. If you take a look at PayPal collapsed today 24%. They came out with earnings and it just got crushed. I was short PayPal. Unfortunately, I was not in it for this move because I was stopped out. You see the red bar here. The SAR indicator had me out, and I had a physical stop order in, and I got stopped out of it. So I wasn't in it, and that happens. But there was another stock that collapsed today. Oh, Google. Google actually closed up. So Google actually came out with positive earnings, and as you can see, the market gapped open, huge gap open. But again, the way that this closed with this, look at the volume on this. The volume that came in, the highest volume we've had in close to a year. I think it broke this volume here, 4 million. Yeah, we broke. It's the highest volume day we've had in a year. But even with all this excitement, Google broke their earnings. The stock gapped open, and yet it ended up closing lower. So that's not a positive sign. It should have been able to hold somewhere around where if it closes down a little bit, not a big deal, but for it to open and then just come down during the day, not a good sign. And then after hours, Facebook has now collapsed 20% after their earnings. So I'm short Facebook. I'm luckily still in it, and I'm probably going to be getting out of that position tomorrow. Let's take a quick look at some of Cathie Wood stocks, and let's just go right to her fund. Again, same pattern as I just mentioned on the NASDAQ. Huge volume day, huge reversal day on Monday, which marks a short-term bottom. Her fund actually retested it, and it held. It broke it intraday, but it did bounce back on higher volume. So it started to sell off, came back with higher volume, and it bounced. It's only bounced 2 days, and we're already getting this bearish pattern with higher volume coming in. So I think the move is going to continue down. I do own SARK, which shorts the ARK, the fund that I just showed you, which is Cathie Wood's ARK fund. I own SARK, which shorts the ARK fund. So we'll see what happens, but I believe the market's heading lower now. And we'll move to some of her stocks. You'll see the same pattern. There was a volume. There was a short-term reversal day on Monday. There was some of her stocks retested and rallied, but just no fuel behind this rally. So Zoom kind of rallied for 2 days, and it looks like it's coming right back down. Look, same thing here. Coinbase, huge intraday reversal day here. 3 days later, it tested, it held, it rallied, but looks like it's coming down. He's going to cycle through some of these. Same thing with Spotify. Big bearish pattern right here. A big engulfing pattern on higher volume. Looks like it's coming down. Twilio. I mean, just all her stocks look like they're coming down. Shopify down 10% today. CRISPR looks like it's coming down. And you can tell they're in established downtrends. I mean, you can take any one of these stocks and just connect the recent highs, and you can see they're in downtrends. So like I said, things were oversold. You're going to get this rally up to the downtrend line before it goes back down. Nothing goes straight down or straight up. You get these stair steps. The only thing in bear markets, when you get the rally back up to the mean reversion, it can happen a lot faster because a lot of people want to cover their shorts. So I have some orders in to short the market. I'm going to be shorting the market some more. Let me take a quick look at some of my orders. I'm going to show you how I enter. So let's take Roku, for example. Roku and 147. All right, so I'm just going to show you. So Roku, for example, I have an order to go short tomorrow. I'm already short Roku. I'm looking to add it to my position. So the low for the day is 155. On the after hours is actually when it's even lower. I have an order to short the stock, to add to my position at 147, and I'm using stop limits. And this is what I'm doing with multiple stocks that I'm trying to short. So what that means is two things need to happen. First, the stock needs to hit 147. So for some reason, if the market goes up tomorrow and the stock never hits 147, then I will not enter the trade. So if the stock if Roku does go down and it does hit 147, my order will be activated. And then the second condition is, first it has to hit 147, and then I have a limit, meaning I only want to buy it at 147. So the two conditions that need to be hit is, one, it needs to hit 147, and two, my order needs to be able to fill at 147. So for some reason, if tomorrow with the Facebook getting crushed on the after hours and down 20%, if the market gaps lower tomorrow, so in Roku's case, let's say it opens at 140, the first condition of my order is activated, saying I want to get in. I'm ready to get in. But I'm only willing to get in at 147. I will only sell short at 147. So if it gaps down to 140 and we have a very negative day and it just goes down to 135, I will not be taking a position in Roku. If it happens to gap down at the open of 140 and rallies during the day and it touches 147, then my order will be activated and I will sell short this stock at 147 if it happens to rally, if it touches that mark. But those are the two conditions. One, first it has to hit 147. So if it never hits 147, if it opens at 160 and rallies up, then my order is never activated. If it hits 147, my order is activated, and the second condition is I only want to get into the trade at 147. So that's how I enter the trades. And then, like I'm always saying, what's your exit strategy? Here's my exit strategy. So I'm using the SAR as my stop out point, which you can see right here, the red. It's one. If I happen to get my order gets filled tomorrow, my stop is at 164.36, which at today's close puts me a risk of 4.8%. Call it 7% because my order is going to be at 147. I'm willing to enter it even at a lower price, but I'm willing to risk 7% of my money on this trade. If it closes above that 164.36, then I'm getting out. So That's my plan. I always know my exit strategy. Every position I get into, I know where my exit strategy is. You want to plan for if things go against you. Yes, I think the market's going down. But maybe the Federal Reserve will come out and say, hey, we're going to print. You know how we printed 30% of the dollars that are in circulation in 2020? We're going to print 50% more. And you never know what can happen. So you got to plan for both situations. You got to plan on how you're going to get out making money, and you got to plan on how you're going to get out losing money. So that's what I think. Let's go back to the NASDAQ. Like I said, that's the volume analysis. You get this volume, this record volume reversal day here on Monday, and this rally we've had this couple days has been just sputtering out. Market conditions have been deteriorating. Sentiment is getting sour. The next thing we need to watch, if we do get this decline tomorrow in leading for the rest of the week, this Thursday, Friday, we need to see if this 334 will hold. If 334 holds, then you want to watch the volume of what happens. Does it come down and do another reversal, a high volume? Then we can see the rally. It might be building a little bit of support, and it may rally again. If it blows right through the support on high volume, then we're going down before it finds support again, which will probably be, if you look at this low on the chart over here, I'm going to highlight it right now, right around there. So 316, call it 316 to 320 would be the next zone of support. So like I said, things don't go straight up or straight down. They kind of stair step, and that would be the next step down. No guarantees. I'm not making any predictions. I'm just showing you how I read the chart, how I read the volume pattern, and how I react to it. So that's it. Keep an eye on this market, because I think we're going down. And like I said, if you're buy and hold, and this turns into a 20-50% drop bear market, you're going to be hurting. Long term, my long-term portfolio, again, NASDAQ still on a sell signal. Russell 2000 still on a sell signal. And the S&P 500 has flipped and given a buy signal, but keep in mind, I don't look at this until Friday. This is a weekly chart, so right now it's Wednesday. It's Wednesday night. If this was to close at this level or higher by Friday, then the S&P 500 has flipped and has given a buy signal again. But as of right now, I'm not reacting to this. I'm waiting until Friday, because this is a weekly chart, and we'll see what happens. If the market drops, then this is probably going to stay in the red and continue giving the filter to stay in cash. So just a quick video on the volume analysis. Again, go back to the NASDAQ and the daily chart, and how Monday was a significant reversal day, and we'll have to see. I think the market's going down, and the next thing to watch is to see if the low of Monday will hold and what the volume does on that day. So keep an eye on it, and if you're long the market, you need to be thinking about getting out. Until the next one.